It's a video on Cummins Incorporated, the valuation of their stock. See here underneath the name here, they're showing on Polaris, the company name is the date of this brief assessment. This is part of the weekly feature stock series offered by Polaris Investing.com. As a reminder, these videos are intended to be anywhere from 5 to 10 minutes long. At the end of the name of the video that you're watching is appended either the word prospect or suspect. Prospect implies that through this assessment, the enough positive things were identified about the company that has been recommended for the investor to look further into whether they would want to purchase the stock or not. If it comes up suspect, that means something was noticed during the assessment that makes it not something that would be recommended to be considered for future consideration. All right, to start off with, we'll notice here that the price momentum for Cummins over the last 3 months has actually been higher than the overall market. Come back to that in a second here, and that the operations type is stable. So that means that it's not issuing a lot of new shares, debt, things like that are fairly debt ratios, things like that are fairly constant, and that corresponds to the kind of industry that it's in. Namely, down here, it's auto, trucks, motorcycle. It is a cyclical sector, and we need to consider where we are in the business cycle as to whether that would come into play here. But it seems like based on the price momentum, there's been some recent uptick, even though some consider this to be kind of late in a bull cycle. And so it's just something you have to consider further. Looking more at the price momentum, go out there and look at the what's been going on over even a longer period of time, a year. You can see here that Cummins has dropped down quite a bit over the year. In fact, considering or looking over the past year, it's down 10% compared to the market being up 10%. But here recently, in the last 3 months, Cummins is up 5%, and the overall market is down 10%. So some good momentum here just recently. The practical investment return that's being calculated by Polaris based on the default values being used is 11.2%, which is a fairly attractive return on investment. It definitely makes Cummins worth looking into further. So to start off, let's look at the first input parameter used by the Polaris, which is the sales growth slider. It's coming in with a default of 15% sales growth being forecasted over the next 5 years. So if we come down here and take this link to the CNN site, we can see that, this link here, that the analysts off the CNN site are forecasting about a 16% sales growth. And if we scroll up here, the 29 analysts on this site have a combined opinion of, actually it's 25 here, of a price range, a 1-year price target of 188 down to 135. But like I said, it's, between them they have about a 16% sales growth. So 15%, CNN saying 16%. Do a little sensitivity analysis real quick on that and to see what happens if I lower it a little bit. You can see here that the theoretical valuation being so much higher than the practical valuation that I can move it down quite a bit and not really impact. I can come down in the 10% range. So nice to know that whether it's 15% or even if it drops down to only 10% sales growth, forecasted investment return is still 11.2%. So we're going to leave it at 15%. Now let's go down here and look at other input parameters used. One is the share issue trend. We go look at the trend here off this site here, and we can see that recently the trend has been down. And now this graph is a little hard to read, but just really just picking up what the trend is. And year over year, we see that Cummins has pretty aggressively been buying back stocks, so expect that to continue forward to result in shares outstanding of 137 million here in 5 years out. Profit margin 7.4%, and figure Polaris is using a 7.4% 5 years out. So kind of industry and the fact that they have stable operations, will go with a 7.4% profit margin sustaining. And then the PE ratio, currently close to 15, but once we get into mean reversion, I talked about this in other videos, that a mean reversion PE is considered to be the cost of capital. 1 plus the cost of capital divided by the cost of capital. Well, historically, the cost of capital is 7.9%. But if we, like we talked about in other videos, if you take 1 divided by this future PE minus 1, which is 1 divided by 12, essentially, you get what the cost of capital that's being used in the future, and that is about 8.3%. So 8.3% compared to the historical cost of capital of 7.9 might be a touch higher than it should be, but it's definitely in the ballpark. So I'm just going to leave it at this future PE of 12.9. Assuming we lowered the cost of capital, more to its historical average, we get back to more its current PE of around 14.5 to 15. But we'll just go with a PE of 12.9, which is right around 13. So I really don't have any values used by Polaris that look really out of line for a company like this. Since it is a new company that I'm not real familiar with, you want to, anytime that you're looking at a new company like this, you should at least get an idea of, okay, well, what size are they? This is a pretty good sized company with a market cap of close to 25 billion. You can see here almost approaching 60,000 employees. The sales up here, this is in 20 billion annual sales, and then we with the sales growth of 15%, we're expecting in 5 years the sales growth could get up to 30 billion. So this is a very sizable company. So based on a quick view here, there's really nothing significant that would be changed, and this seems like again attractive investment return that's possible. The one big concern is the year-over-year return is is 10% compared to the overall market, minus 10% compared to the overall market. Seen a recent uptick, which is a positive sign. Historically, the cost of capital or the riskiness of the asset is right around 8%. So if you can make 11.2% on a stock that possibly going to be 8.3% expected rate of return or representing risk, that looks like a good trade-off. So with everything considered, suggesting that Cummins be something the investor looks further into, so marking it as a prospect.